Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone listening in.
For all those people who thought cryptocurrencies, especially Bitcoin, better than gold, it's safer than gold, it's a haven of savings, and something you should hold on to forever because it could never go down. Well, what happened to the cryptos on Wednesday?
Well, Jim, I don't know who might. If anyone believes that crypto can never go down, they've missed a few drawdowns along the way here. Bitcoin has a pretty notorious record for having some pretty big pullbacks, and we saw a big one this week, and we saw a big one a few days before the last one, and we saw a big one earlier in April. So it's basically we've seen Bitcoin kind of struggling here, and in a sense, it follows what we talked about 2 weeks ago on our show here, that where we talked about how the bullish Bitcoin versus gold narrative had run its course, and that it was reaching exhaustion. When you see more than just a handful of people with laser beams in their eyes on the internet and on Twitter, maybe it's getting to a point of ridiculousness in terms of the bullish narrative. So we've seen a not unexpected pullback, but the volatility with the pullback, I think, has caught everyone by surprise. So what does this mean? Is this just another day at the office for Bitcoin and Bitcoin holders that have gone through these volatility and pullbacks, or is this sort of a top? And I think for Bitcoin, the answer may be a little different than some of the other cryptocurrencies that are out there. So Bitcoin, I think, has a couple of things going for it and a couple of things going against it. And I mean, it remains to be seen whether it can muster enough momentum to set new highs again this year. But there's people in both camps that believe it's done for, and then there's others that believe, oh no, this is still going to go up and up and up. So I think market will determine whether it goes and makes a new high or not. But there's a couple of very interesting, I think, tailwinds and headwinds competing to determine which direction Bitcoin heads here over the next few weeks and few months.
Well, it seems to me that Elon Musk, first of all, said, I'm getting big into Bitcoin, purchased a lot, and then he's saying, oh no, I don't like Bitcoin, it uses too much electricity, I'm looking at other forms of cryptocurrency, and then he says, I'm back in again, and of course that moves Bitcoin tremendously. We have the Chinese government a little over a year ago banning Bitcoin, and then a few months ago encouraging people to get into Bitcoin. Now they're against it again. Does that not have an influence on the value of these cryptos? Plus news today, the U.S. government is looking at making any cryptocurrency transaction over $10,000 reportable to the IRS.
Right. So let's take that last news item first because it's the most current. I think that's a very bullish development because it signals that U.S. Treasury is not on this. We're going to ban Bitcoin. Their approach now seems to be we're going to tax Bitcoin, and so it should be tax like everything else. and anybody who's been investing in cryptocurrencies with the ultimate use case of avoiding taxes has been investing in it for the wrong reasons, and they should sell. And maybe they did sell today, but as last time I checked, a lot of the cryptocurrencies were bouncing back, and in fact, some of the altcoins, which we call them, which are coins other than Bitcoin, really, some of them are still trading in an uptrend. In fact, for example, the Matic coin, which is an altcoin which was sort of in obscurity a year ago, has now soared on recognition that it could provide a lot of the network solutions for Ethereum, which has very high transaction costs. Well, the Matic network can host a lot of the applications that run on Ethereum and provide a cheaper experience. So that coin is actually it got kicked on Wednesday, but it is back above its 7-day moving average at the time of recording here. So it's really a very volatile space, and you really have to do your homework and have your value proposition on the right track. So if you like cryptocurrencies because you think it's a way to escape the government and hide all your transactions and avoid taxes, that's, in my view, that's the wrong use case. Why cryptocurrencies are, I believe, going to continue to thrive, not all of them, but the ones with the winning use cases and adoption, is because they cut out the middleman. They cut out our middle person, right? They allow for transactions to take place between you and, if you're the customer and you want to buy something, if you want to buy something from a supplier, you will be able to do that directly without having to go through payment layers that you do now, such as Visa and MasterCard, which were designed in the 1950s. That network was designed in the 1950s. There's layers of fees every time you pay, a fee. Every time you use your MasterCard, there are so many people with their hands out to take part of that transaction before it gets to the merchant. And, a lot of consumers are not aware of that, but as I can assure you that merchants are very aware of the slice that MasterCard and Visa take, and that's just like one example of why I believe that cryptocurrencies have a use case. So when you read articles in the Wall Street Journal, equating Bitcoin to fentanyl, it just, shows you how out of touch still a lot of the mainstream is on the use cases for Bitcoin potentially, and also other altcoins. So, is it comparing it to gold? I think there's been a lot of comparisons between Bitcoin and gold, but when you look at a lot of the altcoins, it has nothing to do with gold. It has, it is not competing. I do not believe Ethereum is competing with gold. I do not believe any of the altcoins that are kind of working around Ethereum, or trying to improve upon Ethereum or provide the same sort of types of network capabilities as Ethereum. They're not in the same realm as gold. They're the ones those projects are going after the current systems of banking and transactions that were built decades and decades ago that are layered with inefficiencies. That's what's driving cryptocurrency adoption. Yes, in the early days, yes, criminals figured out that they could use it, but guess what? Now the government has figured out how to use cryptocurrencies to track down the criminals. So, there's more to meets the eye than this statement that the IRS, we're going to tax, we want cryptocurrencies to be reported and taxed. Well, welcome to the new millennium, Of course, and anyone who was going into cryptocurrencies that didn't expect this to happen really didn't expect cryptocurrencies to gain widespread adoption. So I think that IRS news is extremely bullish for the cryptocurrency complex, and it's extremely bearish for those who maybe were investing in it thinking that, well, it's a great way to, avoid taxes. Well, that's not the case. That's not going to be the widespread, fuel that, for cryptocurrency adoption. It's going to be cutting out, middlemen, cutting out wholesalers, cutting out inefficiencies. That's what's driving, cryptocurrencies, particularly those altcoins. And, when, we're looking at current market volatility, cryptocurrencies, because they're so new, they're going to be hit particularly hard. So, I wouldn't get too, I wouldn't read too much into the latest downdraft in cryptocurrencies. However, the issues that Elon Musk raised about Bitcoin mining, impact on the environment, and Bill Mayer, he kind of got the ball rolling. Whether you agree with them or not, those are legitimate questions that the Bitcoin community, mining community, is going to have to answer. And you know what, Jim? When they're finished with the Bitcoin crowd on the mining, they're going to come after the other miners. Don't you worry. Like while the environmentalists now are targeting Bitcoin mining, once if they're able to shut that down, well, who's next? Who's next? So we will see how that plays out. And it really is. The ball is really in the court, though, of the Bitcoin mining community to address those concerns. I think you just brush them off at your peril if you say, well, that's just Elon Musk, and no one shouldn't pay attention to him, and there's a narrative out there that the Bitcoin community, the mining community, is going to have to address. I think they can address it. There are, in fact, some Bitcoin mining projects are actually helping to get some clean energy projects off the ground, because what the Bitcoin miners can do, they can take excess power from a clean energy project that may not end up going into a grid. So if the project is too big for the immediate needs of the clean energy consumer, whether it's an industrial plant, and again, in some jurisdictions you cannot sell clean energy into the grid. Some you can, some you cannot. But Bitcoin mining can help make those clean energy projects profitable and doable. Okay, now, so that's the positive side. But there are still Bitcoin mining that takes place using fossil fuel generated electricity, like many activities in the economy. So, it is kind of self-serving for a group with an agenda to point to Bitcoin mining as being, well, this is bad for the environment. But the people in Alberta, they're well aware of how these environmentalists can single out certain economic activities that they don't like and just go viciously after them. And it's something that needs to be addressed by the Bitcoin community. It's not going away until they effectively address that mining issue in terms of the impact on the environment and get their side of the story out. So, I think that is going to be a headwind for Bitcoin. That's going to be one of the headwinds that maybe keep it from hitting new all-time highs this year. That being said, I wouldn't rule it out. It hitting new all-time highs, but I think it's sort of a 50-50. Personally, this is my personal assessment. Everybody should make their own assessment. I think it's 50-50 whether it makes another high this year. Is that the kind of investment you want to bet on? Personally, that's not kind of those aren't the kind of odds I look for when I'm making an investment decision. But there may be other factors that other people can weigh that tilt the odds one way or the other. I think it's going to be, it's going to be a slog for Bitcoin here. But look, the Fed's still at zero interest rates. That's going to help Bitcoin. It's going to help all sorts of risk-oriented assets. So on that front, Bitcoin, has a tailwind. So it'll be interesting. It'll be interesting to see. I just wouldn't bet on, whether it makes another all-time high or not. I don't know. But on the altcoin space, that's a completely different story. I think you look at each individual project, you see how far developed the project is. If it's still a long way off, well, then if long-term interest rates rise, that's not going to be positive for that type of a project. If it's already in adoption and the tokens are used, essentially as currency within an ecosystem, then the short-term rates being at zero will help, I think, the investment case for those types of projects. So I think you got to look at the altcoins one by one. The shakeout this week was probably good. It probably helped sort of lessen the investment case for some of the more marginal coins, and that's the way the free market should work. It's the thing about one reason why especially the mainstream media and the left are so insinuated and so upset about Bitcoin is because it does its own thing. There's no government out in there, manipulating the market. They'd much rather have the central bank, keep home prices artificially up, as long as they can, or to keep the stock market artificially up as long as they can, or to keep junk bond yields at ridiculously low yields, which, no one gets really compensated for risk. There's so many players in the market that would rather see that, but these aren't free market advocates. These are people with vested self-interest, and that's where our economy has headed. It's been a competition of the vested self-interest to keep the status quo. You see it in the Wall Street Journal. You see it in other places, and that's why they're so afraid of cryptocurrencies, because cryptocurrencies, their prices are being set by, yes, it's a wild market because there's no government there to tell you where the price should be. And, a lot of people can't accept that. So, that's kind of the fork of the road we're in, with cryptocurrencies and their adoption. And when I see the type of talent, when I see the type of energy, the intellectual energy, the human capital that's being thrown at all these different projects in the cryptocurrency space, I continue to be bullish over the next 5 years. How these, some of the stronger coins perform even over the next 6 or 7 months. A lot may depend on the bond market. If interest rates start to run away on the upside in the bond market, well then, yes, cryptocurrencies, Bitcoin could be in trouble, but they won't be the only assets in trouble.
Now, you said there's a connection between Bitcoin and the S&P index, and we saw the major stock markets in the U.S. take a bit of a tumble over the last few days, and then they picked up today. Is there a connection between the S&P especially and the cryptos?
Well, here's what I think is happening. We have seen more and more institutional adoption of Bitcoin. And Bitcoin is still, the major coin in the cryptocurrency world. And so as Bitcoin goes, most of the other cryptocurrencies will follow. And now what happens is, I think, because you've got more and more institutional players into the space who use leverage, once there is a bit of a downdraft for whatever reason, and whether it's Elon Musk or whether it's, there's a story about a cryptocurrency exchange that went bust, okay? And all of a sudden, the liquidator came out and said, "Oh, we found we're going to let all you traders who you thought you had your assets lost on this exchange, you can apply to get them back, or some of them back." And so a lot of cryptocurrency traders who thought they had lost all their coins on this exchange all of a sudden ended with a huge windfall, because they were told that they could get their coins back. Well, this has been over a period of time where Dogecoin, for example, had gone from pennies to where it is now. So a lot of these people who thought they lost it all were sitting on these mega returns. So you guess what they would be doing once they got their cryptocurrencies that they thought they'd lost forever, and all of a sudden they're sitting on a Dogecoin that's trading at 50 cents. So I mean, today it's lower than 50 cents. Last time I checked, it was at 40 cents US. But they're going to sell. And I think that's been part of, the selling. But there could be a whole host of reasons why there is a selling. It could just be, retail investors getting over levered. Whatever the case may be, once a downdraft starts to get going, then there is the negative momentum that sits in. And when you have these institutional investors who are highly levered, well, they have to sell. So, and in fact, you kind of see this in the gold market sometimes. I remember in the great financial crisis when stocks were tanking, gold would start to fall. Well, and people go, well, why is gold falling? Well, it's because the institutional investors are getting clobbered on their stock holdings. They have to sell some of their gold to pay for the losses. So now you've got Bitcoin as, being part of that mix. Institutional investors, if they're losing money on Bitcoin, they may have to sell some stocks and vice versa. So now they're kind of getting linked at the hip on the institutional side. So, I think unfortunately, I saw this, we were hearing about all Bitcoins being decoupled from the S&P and it's got a lower beta. I don't know. I think, we will see how that plays out, but I think, unfortunately, in these updrafts and downdrafts, you're probably, because of the rising institutional adoption, you're going to see them move together more often than you have perhaps in the past. So, I hope I'm wrong on that, but that just seems to be the way it's evolving now.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Altland, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, have the U.S. stock markets shown signs that they've peaked or are about to peak?
Well, we put out a piece this week to our subscribers, is Bitcoin leading the S&P 500 lower. And, because we found it interesting that looks like, Bitcoin has at least put in a near-term top. And then we looked at our insider sentiment indicator for the S&P 500, and it looks like in early May, it put in a bottom, and that means, we're at peak insider selling. So that looks like it's confirming that we've seen a top here, a potential top in the S&P 500. Now, that is not an infallible signal, especially in the U.S. market that has had so much support from the Federal Reserve over the past decade that it's been almost impossible to call a market top in the S&P 500. So all we can say is our signals are consistent with a topping process in the S&P 500. Will our signals be right? Time will tell. But there is something different that's going on right now than I think last decade. And that is, in the last decade, you had the Fed, which was the only game in town in supporting markets. And really, the U.S. government in its spending, yes, they spent a lot of money, but you had the Tea Party there in control, limiting spending. The U.S. government spending never really muscled into capital markets. It was always fairly manageable. These days, though, we're starting to see something we haven't talked about in a long time, and that's crowding out, where the U.S. government is spending so much money that they're actually competing in the U.S. financial markets for those dollars. And so while the Fed is keeping things very accommodative, there is this push and pull now of who's going to fund the U.S. Treasury needs. And next week we have a big slew of Treasury auctions coming out, I believe, and Treasury issuance. So it will be very interesting to see how the market participants deal with this demand from Uncle Sam for dollars. Does some of it come out of the stock market? Is the Fed able to indirectly help monetize that. We'll have to see, and that's why I think we're in for volatile times in across all asset classes. I think every once in a while people get lulled into all volatility is falling again. Look, you may love Bitcoin, you may hate Bitcoin, but the fact of the matter, you saw what happened in the cryptocurrency markets the last few weeks. Don't be surprised if we see volatility in the stock markets as well. Not to that extent, because those are, cryptocurrencies are still frontier assets. They're still relatively new. Stocks and bonds are more mature assets, and so the volatility should not be nearly as high. However, based off of the historical comfort level that people have with stock and bond volatility, I think we're in for a few surprises here. So this is going to be a feature of the markets now, particularly as this, when is the Fed going to tighten? We're in for some pretty interesting volatile times. It's going to be great for traders. Traders are going to love it. I think with interest rates being low, it's still great for commodities, because low interest rates at the short end of the curve, that's like, from overnight to say 1 or 2 years, those are really important for the commodity complex, because for those commodities that are being used in production, you're not gonna stick them in a warehouse for more than a couple of years. That's not usually the plan. You may speculate. You may say, I'm going to buy now because I think the price is going to go up, and if it doesn't cost you much to store it, then you will store it. We're into a very good environment, I think, for the commodities. It's going to be volatile. It's not going to be easy. Look, copper took it on the chin yesterday as well. And why was that? Well, I don't know for a fact, but I would speculate that there were some speculators that were long using leverage, and they had to cover. So you saw copper go down on Wednesday. Was there all of a sudden a change in the demand for copper over the next 5 years? Electric vehicle demand took a hit, expected? No, it was in reaction to speculators being likely a squeeze in the cryptocurrency front, and also maybe on the stock market front. And so, you had this chain reaction, right? So you're going to get these. This was not a one-day event. This is going to happen time and time again, for who knows how long. So that's the only. I'm very bullish on volatility. I think it's got. We're going to have some very volatile times ahead. It's great. It's great for traders. It's going to be great for commodity stock pickers, and it's going to be great for HoweStreet.com. Who cater to that segment of the market, right? That long forgotten commodity complex. Gold, silver, yes, but also copper, zinc, battery metals, the whole realm of what was the basis for the Canadian resource market. This is the place to be over the next few years, but it's going to be a volatile ride. It's not going to be like just sitting on Facebook stock and expecting it's going to just have a smooth ride up over 5 years. It's going to be a roller coaster, but it's certainly I think going to be lots of opportunity thanks to the Fed having to keep these overnight rates as low as long as possible, even as they have to kind of address what's going on in the bond market with the U.S. government needing so much cash. There's a lot of work to do there. The short end of the curve, the short interest rates, commodities are going to look pretty good to more and more institutional investors when they see and when they understand what's going on in the bond market and the crowding out that I think is happening now. It's going to be probably pretty rough for those stocks that are valued off of long bonds, long duration assets, long technology stocks that have their promise way out in the future. That's going to be a tough ride for them. But if you're an oil and gas producer, you get cash flow in 6 months. If you're a miner that has you're producing commodities, close to producing commodities at low cost, it's going to be a good environment for those types of investments.
On the educational segment of the show, why is an uptick in insider buying not necessarily a bullish sign?
Well, we've seen an uptick in insider buying in the U.S. market since our indicators made their low in early May. So you think, well, that's good. There's more insider buying. But it all depends, I think, on when that buying is taking place. You see, insiders, first of all, are often early. So when you've seen peak insider selling and it stops, and you see an uptick in buying, this is just the first early stage of market coming to grips with its overvaluation. So what we expect is that we will see an uptick in insider buying, but that insider buying is going to continue for some time as stocks continue to go lower. Remember, insiders like to buy cheaper stocks. The cheaper they get, the more insider buying you will see. So as stocks get momentum to the downside, insider buying will pick up. So you really want to see a lot of insider buying and really pick it. So not just a little incremental uptick in insider buying. That's the first step, but it's also, you're still a long way traditionally from seeing a bottom in stocks. And you see a bottom in stocks when you see peak insider buying. So we've got a long way to go in the U.S. market based off of our signals before we would declare, even a fair valued market, never mind an undervalued market. The problem with our signals in the past, to be quite honest, is that when you have the Fed as the only game in town, valuations never mattered. Okay, but I come back to this crowding out. We are now in an environment where you've got competition for capital from Uncle Sam. That's a game changer. So we will see. We will, one of the potential, there are potential offsetting developments that could help finance the U.S. deficit beyond just the Fed, and that is like a weaker U.S. dollar, right? Could occur as if the U.S. dollar were to really weaken a lot, then it would encourage more foreigners to buy U.S. debt because it's cheaper for them. So, there are other ways of handling it, but we will have to see if it gets handled by higher U.S. Treasury bond rates. If that's the case, it's going to be tough for the stock market to make much headway here, and will probably go lower if we start to see long-term interest rates head higher. We're still not there at that point. I don't think like on the 10-year, 1.7% on the 10-year, which is not even there, isn't astronomically high. I think, to really see some pain in the stock market, you're going to have to see, the 10-year break above 2%. My expectation. I'm not a fixed income specialist. I haven't done any studies to find out where the tripwire is. I mean, maybe it only has to go to 190. I don't know where the tripwire would be for the stock market to really get into some problems. But if long-term bond rates head up for all those tech names, and the U.S. market is very tech heavy, it's going to be a major headwind. So we'll have to see how this plays out. Could U.S. stocks move higher? Could our signal be wrong? Yes, absolutely. That just means that stocks will be getting more expensive, and the Fed will be there making sure they get more expensive. If they can't create CPI inflation, which is what one of their mandates is, they'll create asset price inflation because they've been very good at that, and maybe we'll see more asset price inflation from them. We will have to see.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of inkresearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.